Hello, everybody. I'm Tom Dorsey, and it's the 25th of March, 2011. I wanted to have a little conversation with you today. We have the Stockbroker Institute here in Richmond, which we have twice a year. And what we do is we make that available to professionals, primarily in this business. It's also open to individuals, but mostly it's professionals who are clients of ours. And we have this in Richmond, Virginia, and it's twice a year, as I mentioned. We do it in the spring and we do it in the fall. And it made me think about this today. Why don't we do one in India? And I think that might be an interesting discussion we would have, to have at least a one-day seminar in India to really go through what we do and how we go about it and talk about the future of investing. And that's one thing I wanted to talk about today, was the future of investing. You know, having just come back from India after spending a month there on the road in a rickshaw and driving almost 3,000 kilometers, I got to meet a lot of different people. And I thought a lot about the stock market. And India is probably at the place where the United States was 50 years ago with respect to investing. The difference is you have technology where we didn't have that 50 years ago. So you are going to ramp up to speed much faster than anyone would have anticipated. One of the two types of investing that you'll find is you have traders in India who are interested in more of the Las Vegas kind of thing. And I can tell you this right now, after 36 years on Wall Street, I've never met a trader yet who actually made any money long term. It's just such a high-risk business and a high-commission business that as we went along, as time went along, and computer power got much better, we've been able to change the way we invest. And I look at it almost like breaking through the sound barrier with a jet plane with respect to technical analysis. The old school of just looking at the chart and trading back and forth is really behind us, because on our system, if you're a client of ours or you take a trial of ours through Stock Easy, you'll find that you can search for any patterns just by pressing a button and tell the system what pond you want to fish in, so to speak, what pond you want to look at, and it will automatically do that and select the type of chart patterns that you want. Then there's the other side of the coin. There are those people who prefer to have a solution. And there was a Harvard professor who once said, when he was teaching a class on marketing, that when a company produces a product, what people are looking for in that product is a solution to their problems that product can satisfy. And that's what you have in investing. When you think about the long term of where you would like to be, many of you who might be 20-some years old right now watching this, where are you going to be when you're 50 or 60? What are you going to do with your investments now? How do you begin to build wealth from this day forward? Now, I have a trading account myself at DIF Brokerage, and you've seen us talk about that on the site, DIF Brokerage in Portugal. And I trade foreign currencies, I trade commodities and whatnot. I look at it as my Las Vegas account. That's kind of the adrenaline rush account. But my real money is in the models and providing myself with a solution. What this Harvard professor was talking about when he told his students about that people want a solution for a product, in essence, you might look at it as the 2-inch drill versus the 2-inch hole. What do you really want? You probably want the 2-inch hole, not necessarily the drill. Who wants to fool around with a drill when all you need is a hole? And that's what the solution is providing you as far as models are concerned. One of the things that we're teaching this weekend is how we create the models, how relative strength is played right into our hands, and how computer power has. Computer power, the things that we do today, we could not do 10 years ago. In other words, if we did a matrix of the Standard & Poor's 500 to see where the strength was and the weakness was, what we have to do is divide one stock by another. So if you took IBM and you said, I want to compare IBM to Dell Computer, you would simply divide Dell Computer into IBM, and that gives you a number. Very simple. Simple arithmetic. We then take that number and plot it on a point and figure chart, which gives it life. And from there we can begin to see buy and sell signals that the computer can see very easily, because a buy signal is simply a column of X's that exceeds a previous column of X's, or a column of O's that exceeds a previous column of O's. But when you do that with 500 different stocks, each stock has to be divided 500 times, or actually 499 times, to accomplish this arithmetic for that one stock. By the time we do the matrix for the Standard & Poor's 500, one index, we have to create 250,000 charts overnight. Well, the beauty of this is we couldn't do it 10 years ago, but we have the computer power now to do that. The exchange-traded fund, which is probably the most important product that has come out since I came into this business 36 years ago, gives us the opportunity to compare and contrast now different sectors, asset classes, different countries, things we couldn't do 10 years ago. We now have the exchange-traded funds to be able to do this today around the world. So technical analysis has totally changed for us. We're in a whole different world of technical analysis. India is just beginning to wade into the exchange-traded fund world. You may have noticed in the newspaper just last week that Goldman Sachs bought the company that provides the Bs. The Bs are the ETFs, like the liquid Bs and your gold Bs and your other types of nifty Bs. They just bought them. And there's a reason why Goldman Sachs wants to come to India, and they want to come to India utilizing exchange-traded funds, because this is where you should be, and this is what you need to focus on. Warren Buffett just said he wants to come to India because that's where he sees the growth. So the potential there in India is absolutely fantastic. When you think in terms of exchange-traded funds, you look at our models that we created. One of the models, and you're probably not even aware of it, but when you look at the stock picks by DWA, that's our model for India. So you could look at the stocks picks and say, you know what, I'm going to buy this model, and I am simply going to make the changes whenever we make a change in that stock picks. And for now, we're going to leave it on the open page where anyone can get it. That's for now. We have other models that we're creating right now. In fact, we're doing one that we call the People's Portfolio, where you compare the nifty Bs against the junior Bs. In that same division, we create a number, we plot that number, and then compare that against gold Bs. And when we decide who wins between gold Bs and nifty or junior Bs, then we compare it against liquid Bs to see who wins there. And by doing this process, we know exactly where we need to be as far as investing. I call it the People's Portfolio because it's a very simple approach, and there's only a few things that you have to deal with. And India only has a few ETFs right now. This makes so much sense. The profitability here on the testing that we've done with it is astronomically high. We're going to be finishing with this very soon, and we'll put this up on a certain page on Stock Easy. I'm not sure where we'll display it yet. But for now, the model that we have utilizing relative strength is under the stock picks. This is a model that you can invest in today and simply follow. This is where you get the 2-inch hole instead of the drill. This is your model that you can follow. Let's look at the returns. If we go back in this model, let's say 10 years ago, or actually down back to 2002. The returns from 2002 to present, that's exactly 9 years ago, is 3,385% on our back test versus the CNX Nifty of 396%. If we come in 1 year earlier, we come to March 25th, 2004, the return to present is 794% versus 231 for the Nifty CNX. If we go to March 25th, 2005, the return is 486 versus 180. And as we come in closer, March 2006, the return is from that date to present is 151 versus 72 for the static CNX 50 index. And if we come into 2007, which would be like 5 years ago, March of 2007, 4 years ago, excuse me, that's 102 versus 46 for the static Nifty 50. Now, when you get in closer and you say, where are we on a year-to-date basis, we're down 10%, versus the Nifty is down 7.83%, we're down 10.88%. In the last year, we were down versus the Nifty also. The Nifty outperformed us. One of the things that's happened is that we have made a shift from the junior Bs, which is where we had been most of this whole time. Our model had forced us to be in the small cap stocks, which had been the play, until more recently there's been a shift from small cap to large cap. When you shift like that, it's almost like being in a car and you shift from one gear to another. Let's say I'm in first gear and I wind out first gear and I want to go to second. I have to take my foot off the gas, press the clutch in, move the stick shift to second gear, press my foot back on the gas, let the clutch out, and now I'm in second gear and I wind that out to the next gear. What happens during that period of taking your foot off the gas, putting the clutch in, shifting the car, you lose momentum. And that's exactly what has happened here. My guess is now that you'll probably find once this is restructured and we're clearly into the larger cap stocks and this movement takes place and is long term, you'll see that's where the model begins to really outperform. So I would say now with the model down 10% this year, it's probably a great time to get into the model. And once again, those are the stock picks. It says stock picks, but it's really our model. That's why it's long term. What we try to put out to you each day is the changes in buy and sell signals that are taking place throughout the day. These are much more short-term in nature. But for those of you who are more long-term in nature and looking at building wealth, the models are the place to be. We're creating as much as we possibly can with the Indian market and the models you have, or the ETFs you have available. I really hope that we can come there and maybe foster an interest in more companies coming out with ETFs, because this is clearly the way of the future. There's absolutely no question about it. Let me tell you the real future here. I have an account that I run with models, and DIF is where I manage this account, because DIF allows me to invest in 40 different countries all on one platform. Now, DIF is in Portugal. It's www.dif, David Indigo Frank, .pt, Papa Thomas, in Portugal. Well, that platform is the same platform that Microsoft is now utilizing as a white label of Saxo Bank. And that's where I trade my model account. And I say trade, I actually invest my model account. In essence, what I do with DIF is I simply tell them, as the architect of my portfolio, what models I want to have there. I might have the First Trust 5. I might have the Vanguard Market model. I may have the iShares commodity model and PowerShares commodity models. I may have the Special Situation Guggenheim Special Situation model. I may want to invest in Sweden, Germany, France, and South Korea. And I tell the system, these are the ponds that I want you to fish in. And then our system then does the fishing. It tells them what you should have in each one of those portfolios, and any change that takes place. Just like we show you changes on our stock picks on Stock Easy, any changes that take place, computer talks to computer. In other words, I have nothing to do with it. I've already given instructions of how these models will be managed. The computer then makes the transaction, tells this computer, here's what you must do. This computer actually affects the transaction, does it in the account, and then simply emails me what's been done. So in my German account, I may sell Siemens and buy Volkswagen or something of that nature. The only time that I get involved as the architect of my models is when I need to take one brick out and change that with another brick. Maybe the relationship between Sweden and cash turns to cash and suggests that I sell Sweden. Well, there may be something else like South Korea that's going positive. So I may take the Sweden brick out, replace it with South Korea, and the models run automatically. This is the future. This is what's going to happen in the future. This is where you're going to be in the future. It's not there in India yet. When you're dealing with the type of technology people that we have in Stock Easy, it's going to happen relatively fast, because this is available. It's being done right now in my account. So think about that in the future. Once we're able to create more models that automatically run for you, what we're going to do is give you your life back. This allows you to go do what you do best, have a methodology that you can embrace, and have it automatically done for you. So I think there's some unique things that are coming down the road. I want you to look at the stock picks. That's our models. And I think once we are safely in the large cap stocks and the ship starts its new direction, that's when you're going to see the outperformance pick right back up again. So keep your eyes open. It's going to be very interesting with new models that we have coming out. This is clearly the future. Learn exchange-traded funds. Google exchange-traded funds. Read about them. We have lots of models. We have 18 models on the Dorsey right site, which you can subscribe to as an individual investor, which allows you to invest outside your country too, which is another thing you need to consider too, is that investing outside of India, there's a lot of places and a lot of things that are doing well and places you're going to want to have your money. You have that ability to utilize our models to do that. It's the same type of thing that we do with our own money, with the exception of my fun account, which is for trading, and I call that the fun account. That's not the serious account for building wealth. So at any rate, we've been a little bit long today. I'm going to sign off. I want you to study exchange-traded funds, get to know them well, watch us as we talk about them on Stock Easy, and I think there's some great things that are going to be coming down your way. So that's all we have today. We'll talk to you next week.